Hi guys, how are we doing? I hope you've all had an incredible week. So here's another YouTube video. Obviously this is a weekly thing now. I'm trying to get out as much content as possible. I'm going to try and do a week of trading stuff, and then the other week will be like lifestyle, mindset, just the general things that you need to know as a trader. I know those videos don't get as much views, unfortunately. I noticed going through the analytics of them, the ones that have trade as the thumbnail and obviously a source, obviously get silly views, and the ones that don't get good views and a good response, but they're not reaching the audience that you would like. Now, it doesn't mean I'm not going to do them. I'm going to continue to do them because they are very important, and I think as the channel grows, they'll help people. And obviously, the whole point in this was just to try and help one or two people, different parts of the world, grow a bigger audience, and just try and give some free value. So big ups to all of you that are watching. I know a lot of you tune in on a weekly basis and actually get excited for it, which is incredible to know that I'm able to deliver that. So I appreciate that. Obviously, today's video we're going to go over basically, how to backtest, how to build case studies, how to do end of day markups, the importance of doing these, and essentially how that can lead to building a trade plan, and then that trade plan, how you can kind of implement that into a live market. For me, I find backtesting isn't too what's the word? It isn't. It doesn't replicate live market conditions purely because in a live market you can't click next. You don't have to not have patience. You don't know what's coming, and you can kind of pause it and do as and what you please. Live markets, you don't know what's coming next. You don't know where it's going. You can't really make the mistake, and ultimately you're not in a position where you can just go, oh, I wouldn't have put my trade there. I would have put it here, of course. I find backtesting, you can be a professional backtester and you can be great at it. Then you can go to a live market and you can get lost. And you have to ask yourself, well, why am I getting lost? And normally that is due to the fact that backtesting just doesn't replicate live market conditions. I'm not saying don't do it, but what I am saying is when you've constructed that plan, and for me, what was case studies, was end of day markups every single day, log in all the trades that fit a plan. If you don't have a plan to begin with, do it all in hindsight. Just log all the possible opportunities from the content and videos that you've watched, and then in hindsight, mark up every day: London session, New York session, higher time frame, lower time frame, entries. And then what you'll do is at the end of the week, you can go, okay, so this does this does that, this content video says this, that. Oh, okay, that makes sense. You'll start to see similarities, and from that, you can build a plan. With the plan, you can then look to go into a live market. Now, what I would suggest is maybe forward test to begin with. So obviously nothing on the line, just putting the RR tool on levels that fit the plan. Once you're confident with that and you feel that you're making consistent profits, I would put £100 in an account in a broker, and I would risk 0.1%. So you have 100 goes more or less, and I would just hit the plan, bang, bang, for 2-3 months. What this will do is it will show you that losses don't matter. Two, it's going to show you that your plan does work. Maybe you'll find there's areas where it doesn't, and you can kind of tweak those areas from going through the data that you've gathered. And then what you can do is you can build more of a solid plan. And then what I would say is when you're making sort of 10%, 15% per month, you're then ready to go to a live market with, say, funding or with more of your own capital. But you need to understand that at the beginning, just jumping into funding with a plan that you haven't really tested, or that you're fearful of maybe executing, or you're fearful of losses, it's wrong. It's the wrong way to go. So yeah, I hope this video adds value. If you could, as always, if you could like, subscribe, share. It takes seconds to do, and if we can reach a bigger audience from those shares and from those likes, then that's incredible. I'll drop in the description. There'll be links to a Telegram chat I recently started just for some free charts, and my trade plans in there if you want to see it. Don't just copy it because it probably won't make sense to you, and it won't work if you don't have the data to back up. Obviously, Phantoms, the link to Phantoms website's in there. My Instagram's in there. I may drop the Notion template. And big ups, Nora. So yeah, have a great day. Next slide will be the video. Peace and love, guys. Hi guys, how we doing? Hope you've all had a lovely weekend and a lovely week. So obviously in this video we're just going to go over something that's overlooked a lot, and originally when I first started, and to be honest even the last 8 months, something that I didn't do enough, and it's simply like end of day markups, case studies, logging each day, logging each session, and actually having an understanding of what's going on. If you don't build data and you don't store data, you don't gather any data, one, how are you going to construct a plan? You're probably not. And two, you're going to be a little bit lost, because if you come into something such as, if you want to call it smart money, you want to call it supply and demand, whatever you want to call it, if you come into it with just watching some content and then going and doing bar replay, you'll get lost a hell of a lot. So you need to, first of all, our advice is always start hindsight, and that's just mark up all trades that make sense to you with the content that you've watched, and then from that you can then go into building some kind of plan, and then you can start to do markups based on the plan. Doing markups every day will also show you there's abundance of opportunity. You don't need every single trade. You don't need to stress. I know people take FCMOs and freak out thinking they got to pass in the first day or the first week or whatever. You really don't. There's a reason you have 30 odd days. And also just that expectation that I spoke about in the previous video, which not many of you decided to watch, purely because it's obviously not very interesting on the eye, you would imagine, and everybody wants the latest source. But the reality of it is those videos will help you, and it's just me sharing a part of my journey that I had to have a lot of realizations. I've had to go through a lot of different things, and I'm trying to showcase all of that. So not all of it will always be charts. There obviously is going to be things in between, such as mindset stuff, lifestyle stuff, and whatnot. Anyway, tangent. So, what we're doing here basically today is I'm just going to show you, how you could do case studies, or how you could do markup, and then what you can do with that to then build yourself a plan that then obviously you can start to, use in a live environment on a small account, and then see, how that plan works, continue to grow and build data. And that was what I didn't do when I first got a plan about 8 months ago. I thought that was it, and I didn't have to maybe adapt a little bit. I was still obviously learning, and it kind of hindered me a little bit. And when I went back to doing all my daily markups and then rechecking them at the end of the week, I started to realize, actually, I'm learning a lot from this. And a lot of people in the community say the same. They are very against markups at the beginning. You have to lose that mindset of, I'm coming into trading, I'm going to watch some videos, I'm going to be profitable. It doesn't work like that. It is based on how much hard work and effort you actually put into trading. You have to remember it's a skill. Like any skill, it does take time. If you went to be a doctor or a surgeon, whatever you wanted to do, you're not going to just waltz into a hospital. Hey mate, I've watched a YouTube video, I'm going to take that guy's heart out. It ain't happening. Trading is very, very similar. It's $1 trillion market. Some of the biggest players in the world are trading it. Some of the biggest banks, JP Morgan, Deutsche Bank, all the big boys. And you're just coming in with a video you've watched and going, I'm going to turn the market with a 2-pip stop and reverse it here. It's just stupid. And what happens is you just go from strategy to strategy thinking it's the strategy, and unfortunately it's you. Any strategy can be profitable if you put enough time and effort into it. What you have to do is you have to learn to make your own plan. It can be different to everybody else. It doesn't matter about anybody else. You need to make your own plan. You need to focus on, right, this is my plan. I've got this much data on it. I know it works over this period of time. And now can I execute it with discipline every day when the setup appears, or every week when the setup appears? And this is how you start to construct that plan. For anyone wondering how a plan should look, I have dropped my plan in my Telegram chat. The link is in this description. Feel free to check it out. It's a free Telegram chat, just sharing a bit of knowledge in there. I'll share the odd markup. Things that are a little bit harder to share on YouTube and Instagram. Feel free to check it out. It is my trade plan. It might not make any sense to you, and it probably won't work if you just jump in and try and use it. The reason I shared it as well is because I found out that people on Instagram and that are selling it. I don't like that. I don't want someone making money off something that I've made that I wouldn't charge for anyway. So my plan is on Telegram. Like I say, the link's in my bio, on Instagram, and it'll be in the description of this video. Anyway, right. So if we're faced with a chart here, right, and we're looking at daily time frame, you can go up to the weekly time frame, and this is where, if you're doing a case study, you can start logging from the weekly. So you can sort of go, right, what's the weekly done? Well, we're kind of trending up here, and this recent overall price action is bullish. Overall, you can see we're pretty bearish. What happened? Well, we mitigated this level here. It then tried to break this low originally. It failed, which, you know, made this this level here at the time, you know, a weak low essentially. It made this a weak high. What this did do, you know, is it swept some liquidity here, you know, and then also we had this little flip zone. We then swept some more liquidity, left a future mitigation. We've had that mitigation, and then from here, you know, this is a weak low because it failed to take out this high. So what we've done there is price has now run, taken this low out and taken out this low. We've had a confirmed weekly close, so we are, you know, we're showing signs of bearish momentum. So you could literally just go, you could mark this chart up, you know, annotate it with detail, and then you can say, right, you know, we've had boss here. Overall, I think we could be coming down into potentially these levels or even these levels. So, you know, we are pretty bearish. Then goes to the daily time frame. And again, same sort of thing. You can see, you know, you've had this kind of whole push, which is more or less the weekly push. If you're looking at it on a perspective from a daily perspective, you know, you can be looking at this as your leg down, you know, it breaks this level of structure here. And from that, we're just trending bearish, right? So yes, there'll be pullbacks, and yes, we can play pullbacks. You know, I wouldn't personally class that as a boss bullish. For me, swings still up here. Nonetheless, that is obviously confirming, if you want to call it a change of character, because it is, it took the low, it took the high. You can look to potentially play longs back into the supply level, because you're aware that the supply level is the one that, you know, supply is in control at this point. So in this situation, you can say, right, well, I think that this level here is possibly, I haven't got daily supply levels marked just because I don't really leave them on my screen much. They're just too big, but I'll mark it for you guys here. So let me zoom into this, because I know some people moan saying my screen's too wide. My apologies. So here, if you're looking at this in the context, right, you know, this is a flip. We got H4, just put it there, change that to daily. Okay, right, so, you know, here you can see, right, price came into here, it tried to put in a new high, it failed, and then this buy to sell panel took out this low. There's a flip. We've witnessed a battle between demand and supply. Supply has won. So what we can expect is that, I say expect, you never really want to fully expect it, but what we can theorize is that this buy to sell candle is likely still going to have resting orders, and possibly we're going to play a pullback into this, and then we will continue that bearish trend, right? So all we're doing is we're just building a story, and this kind of goes with how you can forecast. This kind of goes with how you can do markups with case studies, whatever, right? So again, what you would do here is you would simply annotate these things, you know, really detail them, you know, just get a box and go, you know, this is a flip zone, blah blah blah, write whatever it is you want to write. You know, supply is in control, you know, just really annotate it, you know, and take a screenshot of literally this, right? And then you would go and put it in an Notion. And then, you know, from this, you can go, right, okay, so we're starting to get a higher time frame narrative. So now let's go on the 4 hour. Now, obviously on a 4 hour perspective, you know, you can see we've hit this daily zone. We've also hit this 4 hour zone, and it's more so the range. But if we just confirm it like this, you can see that the actual failure of this demand came from here, because this was the last push that then caused the fail of this demand. So this is a, you know, this is a 4 hour range. This candle takes out this candle's liquidity. So, you know, you can mark that out, and you can refine the daily zone to a 4 hour zone, right? Now, obviously, on the 4 hour perspective, we can see that we've been breaking highs and putting in high lows, okay? And obviously, this high low held here. We then had multiple mitigations, stacked all this liquidity up here, and then obviously from here, you know, we've taken longs into this supply. Now, what you have to remember is, rather than just saying I'm going to shoot for the moon, right? You have to say to yourself, what's the higher time frame narrative? Now, obviously, if you don't go on those time frames, you're not going to know. Now, it's not to say that you can't look for longs, you know, of course, because the 4 hour is bullish, and we like to follow the 4 hour expectational order flow, which at this point in time, we're doing this. We're expecting something like this, but we also have to remember the level that we've hit and the narrative that's been built. So you can then again take a photo of this, and you can do exactly the same, literally like I described. You know, this caused the daily demand to fail. This is that 4 hour buy to sell range. It's not had a mitigation. We've had rest in liquidity here as inducement. You can then obviously mark that liquidity up, you know, really detail it. I will show you how some of mine are. I'll be honest, they're not as detailed as that anymore. And I recently, I bought the new Mac last week, and it died on me yesterday. And unfortunately, it died so much that I couldn't get my old data off it. Apple gave me a new one, but I've lost a lot of stuff. So I can't show you how I used to do them. I've obviously recently started using Notion again, so I have got some data on there which we'll go through, and I'll show you how I lay it all out. So then obviously in this perspective right now, you've got the 4 hour marked, you know, so then you can go, okay, so what's the 15-minute doing, right? We know that we could expect to pull back. Now, what we want to wait for here, you know, what we talk about in Phantom a lot is when we're coming into these 4 hour levels and you're against 4 hour trend, you want to wait for a 15-minute change of character before you look to short it. You don't want to just sit on the 1 minute because it's such a big level. You could get multiple different fake outs. You can get basically smashed in the ass a bunch of times. You know, if you're into that stuff, then, you know, you crack on. But reality of it is you don't need to rush. Just because it's coming in, it doesn't mean you're going to be like, oh my God, it's going to go. You know, let it actually show you. So then what we would do is we'd go to the 15-minute. And again, we would go 15-minute here, right? And we just mark things up. So if I'm going to zoom right into this price action, because I know it's pretty scratched up, and move that over. So we come into the 4 hour, right? And what have we done? So we've had our change of character, right? Why? Because we took out this high. So I'm just going to mark it all up for you. Took out that high up there, right? But then took out this little low here. Down, right? So all we've done is we've come up, put a high, pull back, put another high. So there's a chalk, right? That would be the low. We then pull back again and then put another high. So you can even go as much as marking this as your chalk as an aggressive, right? If you wanted to. Chalk, remember, it's just change of character. Yes, it's a Wyckoff theory. We're not trying to change things. It's just simply something that I spurted out one day. You know, it's kind of that shift in order flow. And at higher time frame mitigations, it's very powerful. We'll use wick breaks rather than body breaks. Now, chalk is really important. You don't get it confused with boss because obviously it's not a break of structure. A break of structure is true swing structure. We just keep it very simple at Phantom. Swing structure, change of character, and it works. It's all about keeping things simple. So obviously we had this change of character. Like I say, you can mark this level here because this essentially was the pullback, so that can be classed as the low. So let's put it on that low for you, so anyone that knows what it all is doesn't get confused. So we've had that first initial change of character, right? That doesn't mean we just dive in. Now what I want to see, again, just because of how bullish it was, I want to see that momentum kick in. I want to see bearish order flow. So, you know, you've got this sweep of liquidity. This wick takes out this previous high. So you can mark this as your first kind of mitigation, like that, right? And then you can see at the moment, demand is somewhat holding. So, you know, you just wait. You've then got these levels here, which might, at the moment, are mitigating. Let's see what happens. This is like spread hours, so obviously I wouldn't be trading this. Okay, so, you know, price comes up higher, we get a second mitigation, and this is what we talk about a lot. You can get multiple mitigations of a POI. Once we mitigate this level here, so let's just say we've re-mitigated, I'm going to mark this guy out here. We're still seeing order flow. You know, remember, order flow does generate liquidity, but you shouldn't just be saying, oh, it's going to get swept. Remember, we've already had a sweep here, and then we've had another sweep here, taking out this high. You want to trade away from a sweep, not into it. So now, obviously, demand here started to fail. It's still 3 in the morning, so you wouldn't be looking to trade. Where are we now? 6:30, right? So if we let's just zoom out a little bit. If we zoom out now, we're coming to the chart in the morning, right? And this is what we're faced with. So we're seeing that order flow started to kick in, right? We're seeing that, you know, you do have this unmitigated buy to sell here, and you could include that wick, right? And then we're also seeing that we have this real bunched up price action here from a 15-minute perspective. Now, if you would refine it just to the 15-minute, you know, that's your 15-minute level. One thing I would say is when they're kind of stacked like that, they're very small candles. Sometimes it's easier just to play the range. If you go on the 30-minute, you now have a 30-minute candle. So this is why we say use time frames. It's crucial because it just, look at the difference. You know, you go from, oh, I don't know which one to pick, to, oh, I'm going to just go to the 30-minute. Oh, I've got a candle to pick, right? Now, of course, this could be inducement for the candle above, for this mitigation above, which is on the 15-minute. And you could somewhat just say it's this guy here. This is that last aggressive sweep, right? And we've not had any mitigations of these levels here, right? But what we have to remember as well is we have just taken out some liquidity here, right? So we could see price run from this level. So again, what you would do is you go back on the 15-minute. Obviously, you could log a 30-minute too, right? And you could just to clean it up. And then what you can do is go, when I'm faced with this situation on the 15-minute, I know I can just play the range and I'll be fine. And then all you're doing here is looking for your entry model. Now, if you just play 15-minute levels, like we've gone through before, you know, you could just set your limit on here. Let me get it so it's actually right for you guys. Right, so it'd be there. And then you just have stop above the highs, you'd have like a 3 pip stop. And then obviously that would be that. And then you just pick a target, right? You'd be like, right, where do I think this makes sense? Now, this is that 4-hour leg, right? And the EQ of that leg is this. Just put it on for you, right? So what do we have at the EQ? We have this buy to sell here, right? So what we could do here is, you can take a picture of this and go, right, this is probably a level I'd like to get out at, or at least take partials. It's 8%. Again, it doesn't look clean. If you go on 30, you can see it's literally just sell to buys. So you can obviously have that as a level. You could have the actual 4-hour level down here. You could say, because it's a daily level, when you're seeing this change of character, you're seeing this order flow come into the market, that you know what, actually, we could take out these lows and we could continue with the daily and weekly trend. It all comes down to you. But again, what you would do is you would take a picture of this, right? You would screenshot it as it is. Then you would take a picture as you get tagged in, like that. So you'd now have a photo saying, right now I've been tagged into the trade. Then you would obviously let this trade play. As the trade gets to there, you'd be like, oh, cool, 8.74%. Take a screenshot of it again, right? And then, what you can do is you can say, right, I got out here, or I took most of my partials. I will look for a long. Now, if we don't go back bullish on the 15-minute like long here, what you can do is say, right, in theory, this is just going to continue melting. So you could leave a small partial to run. It's completely down to you. Let it run until you continue to log it, right? And as you can see, it absolutely died. I mean, I'll be honest, not many people, I didn't really expect it to go like that mad on the Friday. I mean, we did 100 odd pips up and we did like 150 on the way down. For EU to do that in 2 days, it's pretty wild. But you can see how it's the same thing always, right? And obviously, if you trade the lower time frames, then you can get in here on the lower time frame and you can just log how you got in. And this is something that you should be doing every single day. Even if you don't feel like it, get your markup done. Whether you do it in the evening, whether you do it during the London lull, whether you do it during New York, if you don't trade New York, it's completely down to you. But if you log these things all the time, you'll start to see how it's the same thing over and over again. So I'm going to reshare my screen and show you how I would log it. So bear with me. Right, stop sharing, share screen. Okay, cool. So this was obviously October last week. And you can see how, it's the same every time. So we have a 4-hour chart. And all I'll do is just put a screenshot in there. Oh, come on. All I'll do is put a screenshot in there like that, showcase what's going on. And then from that, I would obviously look to, and then log in 15 like this, and just, I know mine's not very detailed anymore. Obviously I'll log the 5 in there as well. And then I will log the possible opportunities that fit my plan in here like this. And then I will do one for London and I'll do one for New York like this. And then literally every day, it's the same thing. I will log how much percentage there was for the day, which one in each session, and literally just every day do the same thing. If there's nothing that fits, just right, there was ECB news that day, nothing was really clear, cool, you don't need to trade it, right? And then obviously Friday was the one we just went over here. Total after the week, 214%. Do you need it all? No, you can be happy with 5 or 10. But what this does is it shows you that actually you are showing to yourself how you can make a lot of R, but you're also showing to yourself how if you miss one trade, it doesn't matter. The next trade's around the corner. Like, look at this morning, right? Let's say you missed this trade. I mean, that was too early for me. Look how many other trades present themselves, after, and that's still London session. Like, there's abundance, and then New York session, there's another trade on the same day. There's another trade. Like, there's so many ways to trade. You don't need to be in every one. I'm not doing this all this 214%, so I've got to be in it. And I just write some lessons. Every day there's a setup. You just got to wait for it. Don't rush. Be patient. Trust the plan, because losses mean nothing. They don't, because you could take 2 or 3 hits, get 1 or 2 of these trades, and you're still you're positive. You don't need to go on a mad one, And then if we just go back, I've just got all of these where I'm just, I've logged them. And again, it's the same thing, just detailing things up, adding in what fits the plan, making sure there's a reason behind the trade. And that's it. Literally, doing this over and over and over again will help you so much in getting to where you want to be. And I think it's crucial as a trader that you have a journal. You should be journaling every trade that you take, because you should be ensuring that trade fits your plan. You know, my plan, if you look in Telegram, it's laminated. You can literally, what do you call it? You can laminate it so you can tick off like with a marker pen, like boom, 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 boom. So when you're in the trade in the moment, you can go, has done this, yes, has done that, has done that, boom. A trading plan doesn't need to be 78 pages long with paragraphs and this and that. It needs to be a very simple process that you can follow over and over again without that need to be like, oh, I'm not sure, oh, there's discretion here. Just if you look at mine, you'll see it's very simple. It might look like, mate, that's nothing. That took me like 5 months to get to that point. And to be honest with you, it looks like the most easiest thing in the world. But I only did that by doing this, because what you can do is every weekend you go over it and you can go, right, hang on a minute. So what happened here? Oh, okay, so this did that, and then this did that, and then this happened. Oh, right, okay, I've seen that happen before. I'm going to make a note of that. And you keep doing that until eventually you're like, actually, this is my plan. This is what I keep taking the same trade. Then you take that plan and you take it to a live market and you test that plan over and over and over again. And before you know it, you'll be like, whoa, hang on a minute. Like, this happens all the time. And if you stick to that plan and you execute only that plan, you'll begin to realize how easy it can be. But obviously it's a challenge, and it does take time to get to that point where you're you know, kind of rolling with a plan that you can execute over and over again. But the other videos I drop on YouTube about not focusing on others, probabilities, expectations, I highly advise checking them out, because it's all well, you can have the best plan in the world, right? But if you don't understand it, if you don't have the data to back it up, and you're fearful of executing it, you're never going to get to where you want to be. So the other videos that are dropped are just little insights into ways that may help you, and they may relate. And I think a lot of them do relate, but a lot of us are maybe very, very closed off to admitting or being accountable that that's us. And, you know, that's one big part of being a trader, is you do need to say to yourself, actually, that is me, and I need to stop doing that because it's no good for you. So yeah, I mean, that kind of wraps up today's video. I hope it helped. I feel like it was a bit waffly, so my bad if it was. I know people are probably going to ask for that Notion link. Obviously, it is in Phantom. It's in the Phantom resources, I believe. You know, it's just a very basic Notion model that you can make your own. You know, it doesn't take long. You don't have to do it that way. You can do it however you want. Just make sure that you are actually logging data, because you're not going to get anywhere if you don't. If you just watch a video and then go to a live market and you catch the odd trade here and there and you think you know what you're doing, honestly, longevity wise, and especially when you go for funding, you're going to struggle, because you don't actually know what you're doing. It's like anything, football, rugby, whatever, they'll all have a plan or a tactic or a formation. If they're not doing it, they're going to get moaned at and shouted at. The thing with trading is no one's really there to moan or shout at you, because it is a soul sport. So you need to kind of be like, I'm going to keep myself accountable. Am I actually doing the things that I should be doing? I hope that helped. I hope that was a little bit insightful, a little bit of knowledge and a little bit of sauce in there. Obviously, I appreciate all of you for, you know, tuning in. If you could just like, share, subscribe, it takes seconds to do. Try and get it out there. I'm trying to get this channel to 10K by the end of the year. If we can, like I said, I'll look to dish out a couple of FTMOs or something as like a thank you. Just remember, you know, you don't have to rush trading. It's all about longevity. It's not about how you end the day or the week. It's about the month, the quarter, the year, and have fun with it. You know, it's not about, I think perceptions of trading are very bad. Everyone thinks it's like Lambo lifestyle. You know, I did a Q&A yesterday and everyone's asking me, how much money do you make a month? How much are like, it doesn't matter. If I make £1 a month, why does it matter? It doesn't. If I make $1 million a month, why does it matter? I don't, just to add. But it doesn't, you've got to lose the focus of money, man. There's so much more to life than just having money. And we only realize that when you start to realize that everything you moan about, you actually have pretty good. Like if you're listening to this video, you're doing all right. Remember that. You're doing well. So don't think that you need to have more money to be a better person, because you don't. Anyway, have a great weekend or rest of weekend. Have an incredible week. Let's smash it. New month, 2 months to the end of the year. Any of those goals that you want to hit or you haven't hit yet, or the things you said you're going to do and you haven't, let's try and get them started. Above all else, take it easy. Peace and love, man.